everyone, and Happy New Year, and welcome to today's session. My name is Mark Janji, and I lead the institutional sales desk at Viet Dragon Securities, and I'll be the moderator of today's webinar. As one of our key value propositions, we specialize in identifying and championing predominantly undercovered stocks. Today, we are presenting our 2018 strategy report entitled Be Cautious, Not Pessimistic. As you may know, last week, our research department published this report, and you can download a copy in your GoToWebinar control panel. You can also download the slides of today's presentation in the control panel. This report provides an in-depth analysis and opportunities for this year. And although there are some headwinds globally and in the economy more regionally, just a few days ago, Forbes published a very positive article on Vietnam, stating that Vietnam has become Asia's hottest investment destination. The bottom line of that article is that investors are optimistic about Vietnam's prospects on the back of rising FDI, quickening economic growth, and a privatization program that's boosting the size of the market. Today, Bernard Lapointe, our head of research, and his team will present their 2018 outlook and answer investors' questions. Our equity research department counts 20 analysts and support staff who cover over 60 listed companies. In today's presentation, they will cover a macro view, present their thoughts on Vietnam's stock market outlook, and finally, give their key investment themes and top stock picks. Also, we'd love to hear from you. So if you have any questions during the presentation, please type them into the question box in your GoToWebinar control panel. And at the end of the presentation, we will allocate time to answer them. Finally, I want to mention that a recording of this webinar will be made available. And now, without further ado, we'll turn the time over to Bernard. Are you there?
Yeah, I'm here.
Okay, we're listening to you.
Okay. Well, happy and healthy and wealthy 2019 to all of you. I'll kick off with comments on the global economy and global equity markets, and I'll pass it on to my colleagues that will be focusing more on Vietnam economy, Vietnam markets, sectors that we like, and stock picks that we favor for 2019. I'd like to say is basically 2019 will be a repeat of 2018 for global equity markets. And the answer is mostly yes, in the sense that we expect volatility to stay high because there's still much uncertainty in terms of geopolitics. And that would be one thing that we look at. Geopolitics tensions have started to arise in the first quarter 2018. They took some froth off the markets. After that, we think that it will last until probably the middle of 2019. So geopolitics is a factor to take into account into your analysis of whatever market you're covering. And the other reason that we're a bit worried about global equity markets, not we were when we wrote the report about a month ago. Obviously, things have changed quite a bit, but we think that earnings growth cannot be a relief for equity prices in 2019. There's two reasons for that. Year over year be tougher coming into this year, and GDP growth globally is obviously slowing down, and that puts pressure on pricing power of firms and evidently on margins. So we think that for 2019, you have to be cautious, not pessimistic, which is the title of a report. And as my colleagues will explain later in the presentation, we believe that we're on a stock picking environment, and that if you do your homework right, you can still make money, even though markets may go nowhere. And I just touched on a few things. Baron Rothschild in the 18th century, which was a contrarian nobleman in the UK, said something very famous that everybody on Wall Street and every market knows. Is buy when there's blood in the street. And obviously, a few weeks ago, there was blood in the street. So obviously, there are opportunities out there to make money in equity markets. One of the geopolitics things that we mentioned is on slide 8 in this presentation. Basically, there are a lot of elections globally coming in this year in many very important countries, especially the European Union. We've got the UK Brexit in March. We've got Indian elections. We've got Indonesian election. We have election in the Philippines and probably in Thailand next month. So these will be factors to be watched for in 2019 in terms of global geopolitics. And I'm not going to talk about what's happening in the US because you all know what's going on there. But I will get on to our calls for this year is basically focus on good companies, sectors that are growing fast, and basically management that can deliver. And in Vietnam, there are plenty of companies like this. My colleagues will talk about that later. But to watch for basically in 2019 are two things. The recent inversion of the rates curves in the United States, which usually signal a recession in the next couple of quarters. We're not of the belief that there will be a recession in 2019 globally, but we see a global slowdown as a result of the fact that we are in the ninth year of a cycle of growth globally. So basically, we do not expect a recession, our point of view, in 2019, but expect maybe a slowdown, which will affect profit margin for companies. So I will finish by talking about two things. Currencies. The dollar, we think, will weaken in 2019, basically because interest rate differentials are not favoring the dollar. Interest rates in the US will not rise as much as we expected, as the market expected about 3 months ago. The Fed literally told the market last week that the 3 rate hikes for 2019 will probably not happen. Therefore, you see that the yield curve in the US has shifted downward. So that means that the dollar probably will not stay strong. Our favorite global currency remains the euro. We think ASEAN currency hit the bottom. In fact, most of them have stabilized and got stronger against the US dollar, which is usually for emerging market equities. So this could be a catalyst for ASEAN equities coming into the second or third quarter of 2019. So let's not be naive. It's going to be very, very volatile for the next couple of months until the macro situation stabilizes, which we think will happen. But in the meantime, there are opportunities out there. So we recommend one trade for this year, which be long Asia, ex-Japan, short the US. And the reason for that is that we think institutional money will eventually come back to Asia. But more importantly, Asian money will stay in Asia because of the fact that investors believe that this is the best place to be. And one of the other reasons is that the economic cycle in the US, as I mentioned, and for that matter, Europe, is basically entering its late stage of growth. We've been growing for 9 years. It's about So index price returns in 2018, we see the S&P has massively outperformed the rest of the world. And we think there's going to be a reversal to the mean in 2019. So we believe that being long Asia, short the S&P, it's a relative trade, is a good place to be. In fact, to finish, I would recommend investors to look at relative trades instead of directional trades for the first part of 2019. So I'll pass it on to my colleagues, Mr. Tu, who's covering the Vietnam's economy.
Yes, overall, there's rise of risk, uncertainty risk around the world. So the action of Vietnam government is focused on macroeconomic stability and development of domestic value chain. We expect macroeconomic stability based on financial stability and fiscal stability. Firstly, Vietnam's financial stability is moderate and will be improved in 2019. Lots of commercial bank is satisfy the requirement of short-term funding to meet and long-term loans, around 40%. Meanwhile, asset valuation pressure softened after a tough year in 2018. However, the leverage in the financial sector is relatively high in ASEAN region, just 12% in 2017. 2019 will be a busy year for commercial bank to fulfill the Basel II requirement through raising capital. Vietcombank and BIDV are very close to issue their share to foreign investors. Besides, the State Bank of Vietnam is fully aware of high domestic credit to GDP, so the ratio shot up from 20% to 130% over 20 years. The credit growth will be tightly controlled at around 14 to 50% by 2030. So bad debt is something to ponder on, and as the non-performing loan ratio is relatively high. We think the process of solving bad debt will be more challenging as the economy is in the last business cycle. The overall default rate has been changing significantly because the lending structure is reallocated as the percentage of individual household loans are rising. On the front of fiscal stability, the government focused on curbing public debt and public deficit. They are less subsidized to public department, higher tax burden. The result in higher inflation in recent years. The most important thing is about state investment and IPO of state-owned companies. The Ministry of Finance plans to receive 50 trillion dong from those sources, 50% higher than the realized amount of 2018. Therefore, we expect it be more active in 2019. Besides macroeconomic stability, the government takes efforts in developing the domestic value chain. Vietnamese corporate companies are supported by policy to exploit the domestic market. Vietnam is also the middle point of the China Plus One strategy and New South strategy of South Korea. So cooperating and joining the value chain of multinational corporations are mandatory. Without a new channel of FDI investment, the amount of capital contribution and share purchase skyrocket, while that of new registered and additional capital remain flat. Joining the next generation international economic agreement will affect the development and advantage of Vietnam. There is huge opportunity with the EU Vietnam FTA. However, we are concerned of the illegal or unofficial goods imported from China. Finally, there are key macro indicators and some key events in 2019. Next, Mr. Hill will present the market part.
Thank you, too. So I'm going to continue with the stock market outlook. So if you look back at 2018, you're gonna see here on the bottom, on the chart at the bottom, most of the sector did not perform well in 2018. With the only exception is insurance and real estate, because these two sectors have some stocks that increase, for example, like BVH in insurance and in real estate. So what 2019 gonna be look like? So we're gonna try to focus on three things. The first is the domestic flow, the second is the foreign flows, and the third is other relevant factors that may have an impact on the index, like the upgrading to the emerging market and the divestment. So first, about the domestic, we think that there's a trend that have happened in 2018 and likely gonna continue in 2019, that more shift to bond market. So if you look at here, you can see that the largest bond fund in the market, the Techcombank fund, has seen its asset under management increase by nearly 200% in 2018. And with the appearance of the fund, it allows the chance for not only institutional but also individual investor to invest in. And however, considering the size of the corporate bond market and the bond funds themselves, the amount will not be significant. If you look at the bottom chart, you can see the size of the corporate bond is only around $3.4 billion, so which is relatively small compared to the stock market, with total market cap around $150 billion. So another trend that we're gonna see here is the new capital from brokerage firm. So the latest data for the third quarter 2018, we saw a net increase capital from the brokerage firms of over 7,000 billion VND. And Korean brokerage firms like Mirae Asset, KIS, Shinhan, and KB were the most active. So with this new capital, we think that it's gonna help to improve market liquidity in 2019, and maybe at some points of the time may create some short-term rally. But it should not be seen as a catalyst for a sustainable growth of the market, because we all know what happened in 2018, where we also have a lot of companies raising the capital, but it does not support the market in the long term. It's just like short-term boost to the market in terms of liquidity. So one more important thing we want to focus on is foreign flows. Looking back in 2018, we can see that foreign investors have withdrawn a lot of capital from emerging market. And in Vietnam, if you take the sum up, we can see that foreign investors still net bought, but it is that they bought in the specific deal like Masan or Vinhome. In the market via order matching, we can see on the top chart, foreign investor net sell a lot, and that caused the market decrease quite a bit. However, we think that the big outflow may already happen in 2018, when with all the fears in the market, when the Fed increased interest rate and then the trade wars, we think the big outflow may already happen. And thus, back in 2019, we think there might be some inflows back. However, it will probably take time, because this is like psychology. When investors have been burned in 2018, it takes time for them to recover, and then eventually they might go back to the emerging market with good prospect potential. So Vietnam have always been seen as a country with growth story, with a young demographic. And then we have two more things that when you compare with other emerging markets, and frontier market, we think Vietnam has an advantage. Is the that is the story of upgrading market and the divestment process. So first, we're going to talk about the secondary emerging market. So some people think that this is going to be a to the market. A slightly different view. We think it may not be a game changer. So back in September 2018, Vietnam was added to the watch list of FTSE. And since we already met 9 out of 9 criteria emerging, we think that it is likely that Vietnam would be promoted in September 2020, as in previous case, Saudi Arabia, Kuwait, and China Asia. However, we did a small research and we found out that there was no significant increase for FTS announcements. For example, in Qatar in 2016-2017 and in UAE in 2009-2010, we saw that there was no significant increase. And we think one of the main reasons it could be is that the FTSE criteria for emerging market is not as complicated as the MSCI, so the market like Vietnam can qualify for it quite easily. So if you look at the difference in asset under management of the tracker, FTSE Emerging Index Tracker has only around $65 billion compared to the MSCI Emerging Index Tracker. And that's the difference. Last year we did a research and we found out that for markets that can qualify for the MSCI Emerging Index, there was a huge increase in the capital flow and the index itself. But we think that for the MSCI upgrading be a different story. Probably will not happen 1 to 1 point, because as long as the Vietnamese market has not got the short sale, if the Vietnam has not allowed for the short sale, it's really hard for us to get the upgrade to the emerging market of MSCI. So in overall, we do at least in 2000, the upgrading story could make like a huge changer in the market. So second, we're going to talk a bit about the state divestment. So the state divestment has been experienced a very fast in 2018, and we think the main reason is that the conflict with the decision 32, in which they state that the price of the divestment to be no lower than the 30 days market average. And with the difficulties in the market, it's really hard for the state to divest at a high price. In 2019, we think the story may change because we saw urgent need of the government to divest due to their difficulties in the budget. So they have to change it, and either by lowering the asking price or giving up the controlling share in the business. And only if they make the change, and only if the investment, the companies that the state wanted have a good quality, for example, have a controlling market share, or have the good resources that the strategic investor want to invest in, then the investment may have a good chance to attract the foreign capital. So the last thing we want to talk about funding and valuation in 2019. So in 2018, 9 months, we saw that the net profit after tax increased by 26% compared to 9 months 2017. And mostly the gain comes from the bank and real estate sector. However, we believe that earnings of those sectors have peaked in 2018, which means that 2019 may saw a slowdown in growth. We also did a research about the earning consensus for the top 50 biggest companies of the VN Index, which account for 87% of total market cap, show an earning increase of around 14 to 16%. So that's definitely some slowdown in earnings. Valuation-wise, basically if valuation standing alone is not an issue, it rarely moves entire market just by valuation. It's more about the confidence of the market. And you think that the confidence of the market might improve, but it only happened maybe at the second half of the years when there might be, we hope in the brightest scenario, there's some inflows back of the foreign capital, and then confidence improve, and then market may improve. But talking about valuation, we think that valuation has gone down a bit compared to 2018, but it has not reached the cheap territory yet. If you can look on the table in the top among major index and market, current valuation level are lower than 4 years ago. But Vietnam is the exception, mainly because the growth is still better compared to others. So overall, we think that the VN currently is traded at around 15.6 times, but we think that some stocks are pricier than others. For example, Vin companies account for 22% of total market cap of the index, and these companies is trading valuation whether it comes to PE or PB. Excluding them, the PE is much more reasonable times. So what I try to make the point here is that in the general, the market PE is 15.6 times, but there's some company with higher PE and some with a lower PE. That's why that we need to find the stock that have a low PE. That's why stock picking is what matters here, and we think that's the main point of the 2019 investment, that is stock picking is what matters. So what stock that we're gonna choose, what stock we're gonna like for 2019. Now I'm gonna pass to Ms. Lam to talk about it.
Thank you, Hiếu, for sharing your view on the stock in 2019. Now I would like to move to the investment idea for 2019. I will go briefly on our three key themes for 2019. Then our analyst will talk about our stock pitch for 2019. During our presentation, should you have any question, please type on the question box, and our analyst will available to answer. It's clearly that we will see there will be a short-term difficulty for the stock market in 2019, given that the monetary will be tightening and fiscal stimulus will be phased over the world, and moreover, due to the Fed rate hikes could result the rising interest rate. Clearly that it will not good for the stock market. So the offshore cash flowing into the frontier markets like Vietnam will be not as high as previously. Therefore, although the stock market valuation will reverse to around 60 times by the end of 20, we think that it could be go further lower, given that the forecast earning for forecast EPS for 2019 is just around 14% in 2019, and actually in our coverage list, we have focused on 48 companies, which equivalent to around 50% of total market cap. So that the net earning growth for 2019 is a mere 40%. So we think that in the worst case, the VN index could be a little bit could be go lower than that by the end of 2018. However, for the longer term, we think that Vietnam will have a bright outlook, given that the government has been trying to restructuring and upgrading the economic growth, especially they are trying to their ability to stabilize the economy and during recent years, and they are encouraging the development of the private sector, and um, the the last is that there are a consensus view among our analysts about the prospect of the many key sector in 2019. As you can see on the screen, that the long-term outlook, our analysts still believe that long-term outlook for most sector will still be positive, especially in the sector related to consumer like aviation, technology, bank, residential real estate, security, or some indirect sector like construction. However, in the short term, the rally of commodity and the competition good impact in some sector, which make the outlook in the short term will diverse among the sector. And for Vietnam, we are in 2019. We have high ranking for sector like industrial park, logistics, textile, aviation, retail, and we are quite conservative with the sector which Vietnam don't have a advantage in terms of economy scale like steel, fertilizer, or building material, and automotive tire. Therefore, giving the reason, we think that stock picking is the focus in 2019, and we think that market downturn could provide us opportunity to buy stock. And for this year, we focus on three key themes. The first one is strong fundamental with which are stock that have a strong cash flow and low leverage. For this theme, we have two types. First is the defensive stock, which can pay a security dividend yield, and the second is the leading company in the consumer related sector. The second theme is about the sector who can taking advantage of the global trade agreement and dispute. And the last theme is about the story of state divestment. We think that the VND depreciation and external risk still be a big risk for in 2019, especially in terms of EU euro appreciation, as we expect that this currency will rally in 2019, which will negatively affect the company who have high debt in euro. Regarding to the high dividend yield stock, on the screen are the five stock that we choose, we filter, and there is SFPP to add two utility stock which can pay a super use. MSH, a textile company, also was to notice about it's a new listed stock, but it can be benefits from the FTA as well as the security dividend. It also will have a story grow in from 2020. In the theme about the strong fundamental stock, we would like to talk about the consumer related company who but however we think that in the given the high growth of the sector in recent years, we think that the growth will be slowed down in 2019. And along with that, the competition in the sector will also increase. However, we think that uh, the leader in this sector who are focused on R&D, new product and applied technology will also will be the winner in this sector. Like as you see in the left hand side chart, the mass affluent class. And along with that, the disposable income also growth. This will be support the long-term growth for the consumer-related sector. For this tip, we have step A stock, and of which PPC are and MSH is we choose for due to they are security dividend yield, and in terms of BBB, MBB, and HDB, we think that they are also benefits due to the due to the due to the increase of consumption. Especially HDB, they have a strong relationship with retailers, which will have them to have to benefit the most. And in terms of QNS and VNM, they are the two F&B stock which have which is slowed down in recent years. However, these two companies also focus on R&D and have a high quality product, and we think that in any downturn in 2019 would provide a opportunity to buy stock. The second theme is about the beneficiary in the way of global trade agreement and dispute. For in the stock term, it is a story about the trade war. However, we think that it's stable just is the reason which boosts the way of moving factory from China or Korea move to Vietnam faster, boost the way go faster. Given that Vietnam still will have a advantage in terms of labor cost compared to other Southeast Asia country like Philippines, Thailand, or Malaysia. Moreover, given that we will go into the many FTA like Vietnam, Korea, ATRs, CPTPP, and EVFTA could also have many sectors to deeper penetrate into developed market. And the sector we pick for this team are industrial park, logistics, textile, automotive retailer, and fishery, and some other sector also indirectly benefits from the moving like bank, insurance, and infrastructure. However, the competition among the domestic manufacturer will higher, and therefore we think that in sector that we don't have advantage in terms of economy of scale could be a negative effect like steel or tires or fertilizer. For this team, we have stock in utility, in banking, and in textile and industrial company like KBC and VGG. Uh, the last theme is about the story about the state development, and as Mr. Hill has talked previously, that we expect that mm, uh, the trend will be the story will be back in 2019, given that the Bureau of the Ministry of Finance, they are plan to collect around 50 trillion Vietnam dong is in state development in 2019, which is 50% higher mm, than that in 2018. And some key stock that we think we can pay attention is ACV, PLX. So I will change our presentation into about the stoppage on your screen in our 30 stock, and our analyst will share our view on this stock. And during our presentation, should you have any question, the typing on the question box. The first stock we will talk today is MSH, a textile company.
Yeah, I would like to present about the Sông Hồng Garment. This is the new listed company last November. We think that is a promising stock with a stable business performance and also high cash dividend maintained over the years. Thanks to the advantage of all the FTAs and also the movement of order to Vietnam under the impact of the trade war. Yeah, the potential of order growth in this market is quite large, and MSH mainly export the its FOB order to two major markets, USA and the EU. So I will present more detail about these two markets and the effect of that to the garments textile industry. Yeah, as you can see that these charts show the prospect of order growth in Vietnam, which was imported by three major markets, such as US, EU, and also the Japan. The volume growth rate of Vietnam apparel was quite high compared to the average growth rate in these three markets, especially Japan. You can see in their segment 2018, the average of the industry is around 5%, but I mean that in Japan, but in Vietnam, volume growth rate imported around 15%, really high. And the next slide show the strength and weaknesses of apparel supply area for the U.S. market. This is the market research about the strength and weaknesses of the U.S. fashion company. As you can see that the result was based on the respondent average rating of each country in the scale of from 1 to 5, which means 1 is the much lower performance than the average, and 2, 5 up to the much higher performance than the average. In general, in terms of the uniformity in the criteria such as speed to the market, sourcing cost, and risk of compliance, China and Vietnam are highly appreciated over the other regions, and also is the top choice of US fashion companies. Yeah, the next slide show about the movement of order from China to Vietnam has been increasing over the years, benefiting from the trade war. The speed of the movement increasing in 2018, as you can see. Now we are focused on the business performance of MSH for the years. It have two main activities. We are garment export and also beddings, in which garment export account for around 90% of the total revenue, and also bedding account for 10% of total revenue. However, the beddings have the highest gross profit margin with around 36 to 40%. So thanks to their control of the cost and also the significant gross margin from bedding contributes. So MSH have their highest gross profit margin compared to the peers. For sustainable growth, is also move the value chain toward their FOB orders instead of the CNT. This strategy, we think that it will help them to increase both the revenue and also their profit in the coming years. It's target to increase the proportion of FOB order from 70% to 100% in 2020. Yeah, as you can see in the charts, the gross margin and net margin of MSA is quite attractive compared to the other apparel competitors like TCM, DNG, GMC, and BGG. Also, the ROE and ROA of MSH is quite high and also stable over the years. Besides, some garment tank factory also will be the catalyst for the long-term growth. Due to the full capacity is expected to be built in this year and also come into operation in 2020. Its total output will increase around 17%, with total investment around 300 billion. So it can capture the increasing order from fashion partner in the next coming year. And finally, I will show you about the key financials forecast of MSH over the years. We estimate their gross profit margin to be 19.2%. The revenue in 2019 will increase around 13.5% and the net profit around 15.3%. So that's all about Songho Garment. Now it will be.
Hi, the next topic now is Quảng Ngãi Sugar in the Upcom with the ticker QNS. So the title for QNS is evaluation, and here are some of the key rationale. The first one is the new products. As you know, to survive the F&B segment, the company had to launch a new product to compete with other players. Experiencing the slowdown in the selling volume, start to launch new products in the late 2018 with the flavor black sesame sticky fry and red bean sticky fry, and the company expects that with the two new products, the company can increase its competitiveness to other players. And for this year, the company expect the new product can contribute 6 million liters to the total soy milk consumption and another 40 million liters in 2019. And not for this new product, QNS also plan to launch other products like products for healthy products and the other products based on the soybean. And we think that with some calculation, like we base on the total soy milk consumption, we calculate that the people now consume only 2.9 liters soy milk of QNS per year. The average soy milk consumption per capita in Vietnam is 6.8 liters per year. So you see that there is a huge market for the company to expand the sale. And for the sugar segment, the QNS is now improving its sugar segment by expanding the area and also increase the productivity of the area. You can see the productivity of the area increase year by year, and with the ATGA, the weaker sugar producer will die, and QNX believe that they will take the market share of the weak sugar producer when they try to improve this segment. And the last one is the biomass plant. You know that the QNX run the biomass plant in the 2018, but for 2019, the biomass plant can run for the longer time, so it can contribute more to the net profit in 2019. With the we expect the QNX report profit to grow like 9.5% in 2019. So with a positive outlook for next year, we believe that QNX can should be worth to trade with at a higher valuation compared to the current. Now it's around like 9 PE. So the next slide, some of the key financial ratio of QNX. So the next topic is Mobile World.
Hi everyone. Now a little bit about the company in the retail sector. So the first one is the Mobile World. So briefly talk about the company. It has three segments. The first one is Điện Máy Xanh, which is the trend that sells consumer electronics. And our first rationale is that Điện Máy Xanh will still be the short-term growth driver for the company, because we can see that there are still potential growth in the market. And compared to last year, the value of consumer electronics is still growing about 20% in value. And the fragmentation is still there, as there are nearly 40% of the market is still in the hand of mom and pop stores. And Mobile World plans to open over 100 Điện Máy Xanh stores in this year. And at the same time, they are also expanding their current stores to increase the selling space to capitalize the remaining demand. And our second point is that the new business is the food chains, namely the Điện Máy Xanh is improving in efficiency. You can see is the monthly revenue it's been increasing by a lot in the last few months, from the level of like just around 700 millions a month to now it reached over 1.2 billion in monthly revenue. And And the Mobile World also plans to accelerate the trend in this year with around 500 new stores. And our last point is the attractive valuation. The company is trading at a PE of around 13 times, equivalent to a PEG ratio of just around 0.6. So we expect the market to pay a higher PE for the company in this year when the consumer trend shows some significant improvement. So you can see basically we have three models for the store: the small store, the standard stores, and the large ones. So there are differences in size, traffic, and product mix in each types of store. And we can see we can see in the below chart is that the monthly revenue is increasing a lot, and we expect the trend to keep happening in this year. So to sum up, we expect even though the growth will be slowing down in this year, because like as you know the slowdown in the consumer electronics, but Hosan is not big enough to carry on the growth. But in 2020 we expect the company to come back on the race and show some significant improvement. And P&J, another retail company, but in different segment. So for the gold jewelry market, as we all know, the gold jewelry consumer per capita is very low compared to another countries in the region. Like because Vietnamese consumers are not yet familiar to buying gold jewelry as a fashion item. We mostly buy gold jewelry to like an asset and as a saving purpose. And we expect as the middle income and the high income classes are growing, people in Vietnam will spend more on the jewelry. And the second point is that P&J. The second, that P&J is the one to lead the market at the moment. The market share of the company is estimated about 26% among all the chains, and with their dominance, in the segment, we can expect P&J to be the one to take advantage of the orders in store opening and to gain benefit from the increasing demand of consumer. And the last one is in this year, P&J just spin up and plan to develop the wholesale market. The purpose of this is because the companies also want to approach to the majority of the market share, which is still belong to about 12,000 traditional stores, and by developing the production plan to and set the separate KPI for the production plan, they expect to outsource their products to around 3,000 mom and pop stores. So here are some key financials of the company. And now we will move to the next one.
Hey, hello. I'm Tu and I'm covering industrial park real estate. And as you know, that I will go briefly about the industry. we can see that Vietnam has experienced like ample FDI income from like for the past 3 years. As you can see that the on-time high FDI in 2017 like about 35 billion, and so that creates a huge trend of inflows to Vietnam from at the end from the end of the 2017 till now. So, and coupled with the relocation of manufacturing hub out of China, so we see the increasing demand. We see the increasing demand for industrial park for leasing in Vietnam, especially in the northern region. So based on the remaining leasable land and the like specific need in each region, we pick two stocks, which are Kinh City, which is KBC, and Viglacera, whose base is on the northern. And for the first one, KBC, we see three main catalysts. The first is they're remaining like about 800 hectares remaining leasable land in three provinces where manufacturing activities happen taking place. And the next is the they all like a very good track records on leasing, like namely some of famous tenants like Samsung and LG and Canon and Foxconn. And we think that the trend is on the rise, is still on the rise in for this year, and even we estimate that the leased area for a year is about like 90 to 100 hectares per year. And the second thing about KBC is the growth earning potential from the landlord sale of their project, which is named Phúc Ninh in. So we estimate this will contribute about 30% earning growth for the next 3 years for the company. And the next one is which is also a company in the north of Vietnam, and even the company has several segments like building materials, residential estate, and industrial park. We see that the main catalyst for the company in the next 2 years coming from industrial park and the potential divestment from the MOC, which is the Ministry of Construction. And for industrial park, they also have like more than like about nearly 10 industrial parks in the north, given 800 remaining leasable land, 800 hectares remaining leasable land in the north. And they also see increasing demand from some of like the SME, the technology enterprise moving from out of China to see the demand in the past 3 months. And they also have they are also one of the leading players in building material like the tiles, the building classes, the sanitary wares, and I think this leading role will help them to like expand or like to gain the market share in the future, at least with in the next 3 years. And a specific story for this year is the divestment from the government, and I think they will open doors for the strategic partners so that some of their segment will be improved in profitability. Yeah, so that's it, my pick. Any question? So the next one is utility stocks.
Good afternoon, everyone. My name is Son, and I'm the analyst covering power sector. Today, talking about PV power, I will go not to every details about the company, but to the main catalyst that will support the stock price in the next year. And that is the reason why I can't buy on this stock. First of all, in 2019, we expect a stable operation due to better, more stable supply, input supply, and less major repair or medium repair in the year. Regarding the supply, we all know that the White Orchid gas field will contribute around like 0.7 billion cubic meter of gas for the Southeast region, which is around 10% of the total gas supply in the region. So the gas supply, in my view, is not a big deal for the company in the next year. Regarding the coal supply, we all know from the company that the Vũng Áng 1 power plant has already got a contract for 2019, which ensure around 3.0 million tons of coal for the next year. So that is adequate for our expected production volume of this plant in the next year. In addition, the company, except for the Vũng Áng 1 with the second turbine, which will be repaired, we will run into the medium repair in the rainy season in the next year. The company has no power plant which will need to be repaired. So the operation will be quite smooth in 2019. We expect so. The second catalyst is that favorable market condition will help the company improve not only output but also the gross margin as well. The reason why we expect favorable conditions in CGM is that in 2019, the projection growth of electricity consumption is around 10%, and the total capacity growth of the system is just over 7%. That's why the mobilization of current plant will remain high. In addition, we also see that the probability of El Nino happening in the first half of 2019 will be around over 90%. So the hydropower supply will be a little bit lower than in 2017 and in 2018. So the demand for thermal power will be quite favorable in the next year. So this would be a huge catalyst for a company with a large percentage of portfolio plant in thermal power like PV power. And the last catalyst, but also the most important one, would be the lower depreciation expense in 2019. Because in 2018, and the Yeongjaek 1 power plant will also be fully depreciated in August in 2019. So the expect a strong recovery in Vũng Áng 1 power plant. The main reason is that in 2018, the contract volume QC of Vũng Áng 1 was really low.
However, in 2019, PV Power has successfully renegotiated the planned mobilized volume with A0 with EVN. So that's the reason why they witnessed a improvement in QC that helps the plant to improve their expected earnings in this year. So overall, we forecast that the earnings of PV Power in the next year grow by around 50%, so which is quite significant for a normal utility company. So, in the next step, we will present you about Nam Long.
Hi everyone, my name is Dương Cao Quỳnh, registered in Acchi, and in 2018, transaction volume in key markets, including Hanoi and Ho Chi Minh City, steadily decreased during the recent 2 quarters. And however, price spot is absorption rate, which is still perform well. So looking forward, 2019 among listed company plan, we see some of them have clear intention for the upcoming large-scale project. Real estate still face unresolved legal issue, but which is almost worried about. And in general, we still prefer company with a strong financial capability, legal stability, and deployable land bank. And among our universe, NLGs, Nam Long, and DCOP, DIGs are our topic. And the first we have 3 main points about this company. The first one is the key time to exploit land bank, and so there are two large-scale projects the company will have planned to deploy in this year. The first one is Waterpoint, located in the Long An city and Long An province, and the second is Akari City. Akari City project is classified as mid and segment which will have high absorption rates due to high demand and Nam Long reputation. And the project has been rescheduled to this year. And the second point is healthier financial ratio. And as you know, Nam Long is on way among the top rate companies for corporate, government, and maintain healthy cash flow. The ratio very low compared to most of other real estate company, and the third point is attractive valuation. Current valuation look very attractive with PE and PB 2019 forwards at 7.2 times and 1.4 times, and the upsides come from the prospect of launching 2 key projects next year, namely Waterpoint and Akari City. And the risk to our core is slow sale progress of Waterpoint, and the second is the late legal review and slowdown in overall real estate market. The second stock we prefer for this year is DIG. As you know, 2018, the stock price of this company took a deep dive to around 20% decrease, and we believe that maybe 2019 the company have a strong return. We have 3 main points, the 3 investment catalysts for this company in this year. The first one is huge land bank, but also slow implementation progress. But in 2018, the company has raised the sale launch of 2 high-rise projects, and Nam Vinh Yên and Đại Phước will be the next catalyst. And during this 2018, the IG also restructured its business and raised capital to develop long-term project. The company will accomplish the divestment of to its investment in the diverse areas, namely Viettinton and Vina Capital and Vina Capital stake. We believe that capital received from stake divestment and equity raising is used for the development of long-term project. The strong point right now is the upsides outweighs the downside. PB ratio for the companies right now is only 1.2 times. It's very big, attractive for companies owning high liquidity and large land bank. And we also believe that the company will achieve its profit guidance for 2018 and sees a good earning growth in 2019. As a result, revenue and profit in 2019 will be above 2,000 billion Vietnam dong, and the profits be above 400 billion Vietnam dong, so equivalent to 25% growth. And the next stock is GMNF.
Hello everyone, I'm Tung Nguyen, I'm covering Seaport Seeger. So now we will talk about the GMNF, one of our top pick in this industry. For 2019, we expect the key driver for GMNF to come from the surging in container volume throughput, which is strongly supported by Nam Dinh Vụ Port, with its strong competitive advantage regarding to the location and ability to adapt big vessels. We expect this port throughput to jump 83% from the expected level in 2018 of around 200 TEU to reach 370,000 TEU in 2019. For the GMNF's port cluster in Hải Phòng, we estimate the GMNF's market share in container handling market to increase from 18% in 2007 to 22% in 2019, reaching 1.1 million TEU. In the south, we estimate the Phước Long ICD port to push more around 700,000 TEU. So the total throughput of GMNF is expected to reach 1.8 million TEU in 2019, increasing 12% from the estimated figure in 2018 of 1.6 million TEU. Besides, we expect the container handling pricing to break out from the downtrend since 2015, thanks to the 10% increase in floor price of container handling tariff that regulated by Ministry of Transport and was effective from the 1st of January 2019. However, we estimate the average selling price to increase slightly by around 2% due to the oversupply issue in Hải Phòng. Overall, we expect 2019 port segment's revenue and gross profit to increase by 13% and 24% respectively, and the core profit before tax of GMNF to increase 29% and reaching 673 billion Vietnam dong. The second catalyst for GMNF is the long-term growth prospect will be backed by the project by life, such as Nam Dinh Vụ Phase 2 and the Gemelink project, both of which is expected to start construction in this year and add more around 1.5 million TEUs in capacity by 2021. Moreover, FTA and orders shifting to Vietnam thanks to the cheaper labor cost will be the tailwinds to boost Vietnam's trading activities. That is also a supporting factor for GMNF as one of the largest export operator in Vietnam as well. So we'll talk about the valuation. Given the complicated Gemalab's asset base, we estimate value of Gemalab using some of the parts method comprised from 3 components. Our main assumptions for respective components are: first is the core business, namely port operation and logistics. We apply a target EV to EBITDA multiple of 6 times. Second is the equity value from the logistic joint ventures. And the last one is the inactive non-core assets, which are rubber plants and undeveloped real estate projects. We discount 50% on the book value of the assets. So finally, we derive our 32,000 Vietnam. This implies forward 2019 EV to EBITDA multiple of 9.5 times, which is in line with the 3 years historical average of 10. Therefore, we recommend buying Gemalab with the implied 1-year total return of 25%. So the next is Hòa Phát.
Hello everyone. I want to present the Hòa Phát Group HPG. Due to the difficulties of the steel industry in Vietnam and also in the world, we will have some very difficulty scenario for the business plan of HPG. However, the HPG will remain this investment rationale like huge competitive ability. The Dung Quất project is on track, and this is the most crucial point for the HPG investment rationale. A healthy balance sheet and asset profit for debt payment. And the last but not least is explore the new market in the climate that we have the protectionism is increasing around the world. Because the technology of HPG is completely different from the competitors in Vietnam. They use the BOF technology rather than the EAF. They will have a gross margin 3 to 4 times higher than competitors, and these figures assure the competitive ability for the Hòa Phát Group in the worst case scenario. The Dung Quất project is on track because HPC invested around 28,000 billion Vietnam dong over the 40,000 total capex for Dung Quất project, and this means that over 70% of the project is already invested, and the company leaders expect to finish Dung Quất project on time in the Q2 2019. However, Dung Quất project is like I said before, this is a very crucial point that Dung Quất will be the crucial factor to guarantee the revenue and profit of the Dung Quất of the HPG in 2019. If Dung Quất project is delayed or finished later than the expected time, this will affect a lot to the revenue and the profit of the HPG in 2019. People is afraid about the escalating of debt level of HPG because, but by our calculation, HPG still maintain a healthy balances and assess profit. In 2019, they will have roughly 10,000 billion in profit, compared with the only roughly under 1,500 billion Vietnam dong interest payment. To guarantee the product for the Dung Quất project, they will have to find new market to increase the market size. In the domestic market, they will find harder in the southern market, which is very fragmented by over 14 but no one gain the superior market share in this market. So the HPC leaders is already set part in Dong Nai province to transport the steel product from Dung Quoc project into the southern market. And the next market they will focus on is the Cambodian market, because this is the market which has a very high growth rate of the construction sector, and with the total market size around 2.4 million tons each year. The Cambodia is the next strategic target of the HPCE in 2019. As you can see from the Roche machine and the next machine of HPC and other competitors, they are very high, 3 to 4 times higher than the company. Will guarantee the profit and the competitive ability of HPC if the market is not really well as we predicted. The interest expense versus EBITDA and the long-term plus short-term debt versus equity of the HPC is maintaining at a very good level in compared with other competitors. As you can see on the southern market share and the Vietnam market share, the HPC only acquired 6.9% in the southern market share. So this is a very promising market for HPC in 2019. And the value of the export product to Cambodia of the Vietnam steel industry is increasing dramatically in 2018, and this trend will continue in 2019. This is some figures of the HPC group, and I finished my presentation.
Hi everyone, my name is Nan, and in this part I would like to highlight some of the key points regarding HD Bank and why this can be an option for your investment. The first is that HDB possesses a diverse customer ecosystem, which includes Vietjet and other retail-oriented companies, such as Cookmart, Vinamilk, Petrolimex, and VNP. And based on the close relationship with these partners, the bank can exploit their supply chain. For example, the suppliers includes the small and medium-sized enterprise, and the customers, which include the individuals, from which they can expand their customer base. So, and also HDB has already prepared for a wide transaction network to serve such a wide customer base. For the second category is that we see HD Bank has the potential to grow income, as more than 60% of the service income is contributed from insurance brokerage, which is expanding strongly and contributing more and more to the total income recently. We expect that the bank will be amongst those with the highest growth of service income, at least in the next 2 to 3 years. And last but equally important, these advantages, especially regarding the customer ecosystem and transaction network, will be reinforced by the merger with PG Bank. This merger has been approved in principle by the SPV in the third quarter of last year, and we expect that PG Bank has the same retail strategy with HD Bank, and the merger will reinforce HD Bank's competitive advantage in retail banking strategy with a widened transaction network, a higher CASA and lower funding costs, higher service income, and most likely higher credit growth quota given by the SPV. With these advantages, we believe that the growth in the fourth quarter of last year and in 2019 will be stable and will be recovered when the lending is allowed to expand. Overall, we expect that the net profit will grow by approximately 60% in 2018 and approximately 20% in 2019. And the provision expense is not likely a concern because HDB is maintaining a stable asset quality, and it expects to clear all of the VA/MC debt next year. So that is the key point about HD Bank. Now we will come to the final stock of HAX. Hello everyone, my name is V, and I am covering automobile market. So now I will talk about the HAX. For those who are not familiar to AAS, AAX is a leader automobile dealer who specializes in distributing high-end cars from Mercedes Vietnam. And there are three catalysts that I used to rate by AAX. The first is that sales in 2019 is forecasted to grow strongly. And it is due to the strong position of MBV and the recovery of the auto market. The first is the strong position of MBV. As you know, MBV is the leader player in the luxury automobile market with the market share of about 60 to 70%. And about the recovery of the auto market. As you know, in 2017, the auto market faced challenges from weak consumption as consumer waited for the tariff cut as the ATA and in 2018, the industry continued to face shortages of supply due to the tough requirements of Decree 116. However, in 2019, we expect that auto market will not have any challenges. Supply in 2019 is expected to recover strongly because since late 2018, most export countries, including Germany, that export Mercedes to Vietnam, could meet the requirements of Decree 116 and could export to Vietnam. And we also expect that the demand to be strong in 2019 because limited supply in 2018 has not met the high demand for luxury cars. And the population in the affluent class improved strongly in Vietnam recently. And secondly, the distribution of other brands supports long-term growth of HAX. In 2019, two subsidiaries of HAS will sell Nissan and VinFast cars. However, in the short term, we will not expect the high proportion to revenue and earnings to AAS. But in the long term, we think that two new brands will pave the way for the long-term earning growth. Last but not least, I think current valuation is relatively attractive. HAX is trading at the PE ratio of 5 times. Meanwhile, EPS growth is expected to be about 9% in 2019. So we believe that the valuation is quite attractive. On the other hand, there are some risks to our call. The first is the unpredictable amount of incentives that HAS will receive from MBV make quarterly earnings of HAS highly volatile. And secondly is the competition in the high-end auto market could be fiercer than expected, resulting in the lower gross profit margin than our forecast. So that's all my presentation. Thank you for listening.
Okay, well, thank you very much. We right now have come to the end of our presentation. We hope that you have enjoyed it and that it has been useful and interesting. At this stage, if there are any questions, we invite you to write them in the question section in the control panel. Otherwise, you can always contact me. This is Mark Janji, and we can set up a private call with our analysts.